What's up YouTube, it's Sank here to make videos on the stock market. Guys, as always, I've got a jam-packed one for you today, but before I get cracking, if you don't have a Trading 212 account already, do sign up using my link down below and you'll get a free share of stock worth up to $100. Now, if you've been following this channel over the weekend, you know I've been prepping you and giving you a lot of plays ready for that opening bell on Monday, but the fun doesn't stop because I've got a couple of more plays for us to consider loading up on if we haven't already built out our positions. Alright, so jumping straight into it, up on screen we have Nio. Now this is a play that is no stranger to us over on this channel. A lot of us already have well built up positions in Nio because we've been buying the dip while it's been consolidating, or we got into the stock very early. But I must put on your radar that we are just days away from some pretty big potential catalysts that could push that share price past the $50 mark. With a stock price of $45, Nio looks to be finishing the year in line with my end of year price prediction, which I gave you guys at the beginning of the month, which is $42 to $46. And I have an entry point below 46. So Nio right now is in its buy zone. Now I want to jump into the share price graph, show you guys a few things because it'll help us understand the Nio share price chart, but also when we can expect a sustained rise in its share price. So if you've been rocking with the channel, you know that each and every day this month I've been giving you guys tools and different ways in which you can read a stock price chart. And this is my aim to help you guys level up as we head into 2021. It's going to help you guys with your investment decisions. And today we're looking at volume because there's some interesting insights which we can draw from Nio's trading volume, which is going to help us understand when we should see the next sustained run up in its share price. So volume is just simply the number of shares traded in a given time, but you could think of this as how much conviction investors have in the current trend, right? So if they believe in the trend, you're going to see high volume. If they don't, then you're going to see low volume. So quickly jumping into the Nio share price graph, let me show you guys a few things. This first run up that we had in October, right? This massive run up here, the volume is down below. You can see that the volume was increasing, right? The volume's increasing with the share price run up, right? And you can see that the volume increase starts slightly just before the share price starts to increase. Now this run up that we had here in the middle of November up until Nio's highs, which was towards the end of November, if we look at the volume, you can see clearly that the volume is decreasing while the share price is increasing, right? So this is a sign, like I said, that the investors don't have conviction in the current trend in the Nio share price graph. And what happened immediately after that? The share price dropped, right? So you can see that trend there. So what we want to see from this analysis is that we want to see the volume increasing with the share price increasing as well. And this is going to give us a sustained run up in that share price. Now, let me just quickly draw your attention to Tesla. Tesla had a big run up on the S&P 500 inclusion. Down below you can see the volume, and if you look very closely you can see that there is a slight upwards trend in the volume of the Tesla share price. And as you can see, the Tesla share price hasn't tanked, right? So again, we're seeing that investors have conviction in this current trend. So it's not looking likely that we're going to have a massive sell-off in the Tesla share price based on this volume analysis. So now flicking back to the Nio share price graph, just last week we saw a run up in the Nio share price, and I know many of you out there thought that Nio could potentially surpass the $50 resistance line and it could be onwards and upwards for Nio thereafter. But let me draw your attention to the trading volume during last week's run up in Nio share price graph. So as you can see, the Nio share price graph inside this purple circle is increasing, right? A nice increase in that share price. But guys, look at the trading volume. You can see that it's clearly decreasing, right? And then shortly after, there's a decrease in that share price. Now remember, that decrease in the volume is indicating that investors don't have conviction in the current trend in the share price. So we know that what we want to see going forward when Nio has another run up in its share price is we want to see increasing trading volume to match the increasing share price movement. So that's also good for you guys when next Nio has this run up going, past 50, 55, into 60 and beyond. Just take a look at the trading volume if you are going to buy in at the point where that share price is rising. Because if that volume, if you don't see increasing volume with that increasing share price as Nio passes 50 into 60, it may indicate that it's not a good time to buy during the run up, because you could see that share price come down again. So that is some interesting analysis that I wanted to put on you guys' radar for next year. So in terms of how we can expect NIO to close out the year, if we look at the trading volume, we can clearly see it's on a downwards trend, which could indicate that there's some further potential downward movement in that share price next week. So I don't expect the NIO share price to explode next week, given what I can see on screen. But what I did want to do is put on your radar that there are some interesting catalysts coming up only a few days away. Now, in terms of short-term catalysts for NIO stock, there are two I wanted to put on your radar. The first is that we're only 12 or 13 days now away from Nioday on the 9th of January. And we know at Nioday that the company is set to announce some interesting, exciting things for us investors. We know that that new sedan model is set to be launched, and this could add a whole new dimension to the NIO business. If we just take XPeng as an example, their P7 model, which is their sedan, had a fantastic November month, up about 30% month on month. So this could really be good signs for NIO and could really boost their deliveries going into 2021. Now, we also know they could unveil a 150 kilowatt hour battery that they've been working on after their 100 kilowatt hour battery was well received this year. In addition to that, we could get an update on their NP2, which is their next vehicle platform, right? Which should help with their autonomous driving. So there's a lot of exciting things that should come out of Nioday, and all of these could act as a catalyst to push that share price up further. Now, another potential catalyst to the NIO stock price, which will come sooner than Nioday, is the announcement of their December delivery numbers, which will take place on the 1st of January. Now, that is only 4 days away. Now, there's guidance that those delivery numbers should be over 6,000, and that is a big step up from the 5,200 delivery numbers that they did in November. But I do have faith that NIO can hit that for two reasons. One is that I know that they have a big order backlog. In October, that backlog was over 7,000 vehicles, so I assume it's a lot more now. And they've been working on upgrading their production capacity this month to 7,500 vehicles. So I have faith that NIO can hit those guidance numbers. So now that we know the short-term potential catalyst to the NIO stock price, the aim is to make sure that we have well built out positions ready for that potential rise in the share price thereafter. Another play I wanted to put on your radar going into next week is XPeng. Now, XPeng currently trading at $41. This is a price we haven't seen since mid-November, and I like this price point. I have an entry point below $42 for XPeng, and now they're in the buy zone. I like XPeng for a number of reasons. Firstly, they had a fantastic November delivery month, well surpassing the month-on-month growth that we saw from NIO and that we saw from Li Auto, right? Touching 40% month-on-month growth. So their cars are in well demand. The second is that they're doing really well. The second is that they're doing very well in the race to autonomous driving. You know, we had announcements earlier this month that they have LiDAR technology, and I think we're going to receive positive news going into 2021. The third is that their cars have now arrived in Europe, and they have first mover advantage when it comes to the European expansion, right? So their cars are currently in Norway, and they're currently building and strategizing the next expansion route, right? So they're going to expand into other different European countries. So I do see positive things for XPeng going into 2021. So alright guys, this question of the day time. This question comes from Ross. The question is, how do you know what stocks are good and what are not? So thank you very much for sending in this question, guys. If you have any questions or comments, leave them down below for me. So this is a great question, and it could be an entire video in itself. In fact, it can actually be multiple videos, right? I've been doing this for well over a decade. I used to be a banker, and this is what I used to do day and night. And I ran my own personal portfolios as well as client portfolios. Now, there's a lot of things I look out for, and there's a lot of research that I do before I come and present you guys any plays. But I'm just going to highlight 3 things for you guys on what I look out for. So one of the first things I look out for is that the industry the company is in is growing fast. What do I mean by fast? I mean faster than the S&P 500 of about 10% a year. So I want to invest in companies that are growing faster than 10% a year. So let's take Alpine 4 Technologies, for example. We know they have their Impossible Aerospace acquisition that they've recently made. And that drone sector, the UAV sector, is set to grow around 15% constant annual growth rate between now and 2025. So this ticks the box because it's greater than 10%, and we know that Alpine 4 Technologies is an acquisition company that's going to constantly acquire different companies in fast growing industries that I could be confident are growing faster than 10%. That's why we like that play. The second thing I might look out for is that the company is profitable or showing a sign to profitability. What do I mean by that? I mean that each and every quarterly report we get, or each and every annual report we get, their margins are improving. That's one of the reasons why we like Nio, because every quarterly report we get, their gross margins are improving, their vehicle margins are improving, and one day that means that they're going to be net income positive. Now, we want a company to be net income positive, because what's going to happen if you invest in a company that is not going to be profitable? You're going to see that share price decline over time, right? That's why the earnings per share metric is so important. You want to be investing in a company that is going to have net incomes. So the third thing I might look out for is that the company has upcoming catalysts that are going to boost its share price. So take, for example, American Battery Metals, which I presented to you guys yesterday in the penny stock video. They have a massive catalyst being their recycling plant, right? Any positive news on progress of the construction of their recycling plant is going to boost that share price up. So you want to be investing in assets that have upcoming catalysts. So that brings us to the end of the video. Please hit a like, it really helps the channel out. If you're new, do hit that subscribe button. I post each and every day. Guys, we're coming up to the last week of the year, and we aim to dominate and close the week off on a high, because that's how we aim to start 2021 and continue. So guys, as I always say, check into the channel each and every day. The stock market is rapidly moving, and I'll catch you guys in the next one.